Good morning, everyone, and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 25th of March. We have got a rally on our hands. Now, the question is it the bottom? Well, certainly the market reaction to how the come to an agreement on a massive $2 trillion fiscal support package has been decisively positive. We've now got 2 days, the prospect of 2 days of gains in a row. We saw record climbs yesterday on Wall Street and European markets, to that matter, but mainly Wall Street. Look at this, 9.3% higher on the S&P 500. The Dow, 11.4% higher. Futures another 1.9% higher, and you can see that translated to strong gains in Europe. But let me show you this S&P 500 chart. Well, the recovery on the S&P 500 obviously is only 1 day really at the moment, and you haven't actually seen 2 days consecutive gains in a row, I think, since the big sell-off began. So that'll be an interesting one to watch today. But you're not yet even at 23.6% fib level, although the futures are pointing to some decent gains at the open today. But still, we need to see further movement, I think, in order to be fairly confident that maybe a low, possibly even the low, has been reached, because so often we've seen these 1 day rallies that have just been instantly sold into. So that is the big hurdle we need to get past. But you can see the volatility is still massive. 59.60 on the VIX volatility, but it's interesting that we are starting to see other markets picking up. We've got that there it is. We've got oil, which is starting to show a few days of gains actually in a row. 3 days of gains, the prospect of recovery in a row now on oil, which is interesting. Now, the Treasury yields market, or Treasury market, has settled down to an extent, which is, I think, to be honest, I think that's a fairly positive sign. We've seen the 10-year Treasuries just sort of, in the last couple of days, not really going too far. Maybe that is a sign that maybe investors and traders are looking elsewhere, away from Treasuries, towards other markets, and risk appetite obviously being the big mover today. Look at how the dollar is starting to now roll over that massive dollar bull run that we saw as the market really reached a crescendo of selling pressure. Well, the dollar is starting to pull back, and that is obviously now being reflected across the major pairs. Euro dollar higher, sterling dollar, look at that, 1960. That is a key level of resistance area there. I'll talk about that in a bit. But you've also got Aussie dollar, Kiwi dollar, all higher. It's only really the yen that's not performing well. The yen is this classic safe haven, so it all looking pretty positive today. So some really interesting moves that we are seeing through these markets at the moment. Now, in terms of data points, well, we've got the UK, or we had, I should say, the UK inflation numbers this morning, and they came in basically the ONS, the Organisation of National Statistics, Office of National Statistics. Sorry, I apologise. Is announcing UK data early now. So 7 o'clock in the morning comes the UK data, and inflation was this morning. Inflation in line with the estimates on the headline inflation, core headline CPI, and the core CPI a bit higher than expected for February, but obviously we're going to be looking out for sort of the growth data and the economic activity data really to be the important numbers in the days and weeks ahead. Now, German EFO data off a cliff, just confirming really the flash data, but even worse to an extent. Look at that actual data, 86.1. Look at the expectations of the EFO survey, 79.7. I'll show you how that actually comes through on the chart. Look at that, off a cliff with that expectations number. So really strong declines in those EFO data. So it just shows how the German economy, well, I mean, it's not to be unexpected really, is it? But the German economy has ground to a massive halt and falling significantly now on the March data. So Q1 is going to be pretty hairy, to say the least. Into the afternoon, we're looking out for US data. we've got the durable goods at 12.30, expected to decline in February by 0.8%. Well, and on the ex-transport basis, 0.4%. So that's the one we look at, the core data there, ex-transport. But still, that's not horrendous, but the real significant blow, I think, will be coming in March data. But yeah, still the durable goods there will be important this afternoon potentially. Now, the EIA crude oil inventories expecting another build of 2.8 million barrels. That would be a 9th week in a row of inventory build from the EIA. So again, not great for oil, but to be honest, it's all about risk appetite at the moment, I think, for markets. So yeah, a few bits of data points today, but nothing too significant. Crikey, I apologise. I've noticed I haven't put in my support resistances for Euro Yen. I apologise for that. But let's talk about Euro Yen as my chart today, nonetheless. So we have Euro Yen, which is climbing and climbing decisively now. We've seen, look at the choppiness of this period between the 9th and the 23rd of March, that 2-week period of where markets were massively being sold off. Euro Yen uncertain in its moves, but we're now starting to see a run of positive candles forming. Look at those stochastics, it's accelerating higher, as are the MACD lines. The RSI 57, well, 57 is at multi-week highs now, but I think above 60 would be the confirmation of really strong momentum. It's now looking for a test of this 121 figure area of resistance, which, if I put my crosshair on it, 121, you can see numerous sort of turning points around 121. That looks to be an area of pivot area, 21 to 2140. Looks to be as though the market is positioning for a test of that resistance. And if that is the case, then 2285 comes back into play. Let me just zoom out here. You can see basically Euro Yen has been a trading range for the past, well, since June last year. So it looks to be pulling towards the top of that range with this improving momentum now. And it looks to be running higher. Now, in terms of support resistance levels, as I said, 21 figure and 2140 overhead. Support lines, you're looking at this run of higher lows that you're now increasingly getting. So you're looking at 119.50 as your really important initial support. You want to continue to post these run of higher lows. 118.80 to 119 figure, I think I said on the daily report. Or was it 1930? 1930, here we go, these breakout levels. So 1880 to 1930, again, that is the important level of support now, because you can see these are breakout levels, 1930. So posting these higher lows is really important, and you need to start now building on that and pushing on forward. So Euro Yen pulling higher is generally considered to be market positive, and that would be something that we need to consider as well. So looking much better there in Euro Yen. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.